Hello aspirants, a very warm welcome to Oliveboard. This is Rohan Dange, your faculty for finance. And this week or today we are going to talk about 15 finance based MCQs which are highly expected in this year's exam. So without much of a further ado, let's begin. Okay, so let's start now. Question number 1. In India, alternative investment funds doesn't include. Read the question carefully and start answering. In India, alternative investment funds AIFs doesn't include A. Mutual funds, B. Venture capital funds, C. Private equity funds, D. Infrastructure funds. So this looks to be a difficult question, but if you have read about the alternative investment funds, so this could be an easy question also for those who have read it. So it could be asked as a one marker in the exam. You never know, it could also be asked for a two marker, but my bet is that it could be asked as a one marker. Anyways, I'm expecting more answers. In India, alternative investment funds doesn't include A. Mutual funds, B. Venture capital funds, C. Private equity funds, D. Infrastructure funds. So what do you think is the correct answer? I'm going to reveal the correct answer in the course of next 5 seconds. 5, 4, 3, 2, 1. And the answer is A. Okay, so what is the answer? Mutual funds. Okay, so let's take a look at the explanation. So as per SEBI regulations 2012, the alternative funds shall seek registration in one of the three categories. Which are the three categories under AIF? Category 1, category 2 and category 3. So we will talk about each category in detail. Here I would also like to mention that you need to you need to make your notes out of these, because these are your key takeaways. Okay, explanation is very important as much as the question. Okay, so category 1 basically invest in startups or small and medium scale enterprises or any other sector which the government considers economically and socially viable. So here the government consideration is important. So basically, which type of funds are included in category 1? Infrastructure funds, angel funds, venture capital funds, and social venture funds. Again, I will repeat. What does it include? Infrastructure funds, angel funds, venture capital funds, social venture funds. Correct. Category 2. These include alternative investment funds such as private equity funds or debt funds, for which no specific incentives or concessions are given by the government or any other regulator. So here you need to understand that wherever there is no concession given by the government, that could also be categorized as a category 2 fund. So what are the types of funds here? Fund of funds, debt funds and private equity funds, right? Fund of funds, debt funds and private equity funds. This is the area where the government has not given any concessions. Then the alternative funds can also be invested in the category 3 funds, such as the hedge funds or the funds which trade with a view to make short-term returns, or such other funds which are open-ended and for which no specific incentives or concessions are given by the government or any other regulator. So here you have to remember hedge funds and private investment in private public equity funds. Private investment in public equity funds and obviously hedge funds. Yeah. So basically funds which want to make short-term returns and which have no government concession in addition to that are categorized as category 3 funds, right? So I hope you have made your notes regarding category 1, category 2 and category 3 funds. Okay, so category 1 funds include infrastructure funds, angel funds, venture capital funds and social venture funds. So quite obviously mutual funds are not included here, right? So private equity funds can also be classified as alternative investment funds apart from uh, uh, what you can say category 2 funds. Consumer price index measures the price of goods only, both goods and services, services only, D none of the above. See, it's a very easy question. It could be asked as a one marker. This is a typical phase 1 question. In phase 1, when you talk about the static portion, these are typically the questions which are asked. So the consumer price index measures the price of A goods only, B both goods and services, C services only, D none of the above. I'm expecting more answers. I'm expecting more people to join in, and I'm expecting more people to be active participant in today's session. So what do you think is the correct answer? Consumer price index measures the price of goods only, both goods and services, services only, D, none of the above. What do you think is the correct answer? The consumer price index measures the price of A, goods only, B, both goods and services, C, services only, D, none of the above. So what do you think is the correct answer? Let's take a look at the correct answer. This is a fairly easy question. The answer is obviously B, both goods and services. It is WPI which measures the price rise in only goods and commodities, whereas consumer price index includes both goods and services, right? So it measures the price of goods and services. It includes 8 types of expenses, that is tuition fee, communication, transportation, entertainment, clothing, food and beverages, housing and medical expenses. So these are the services in addition to the goods which are already covered under WPI, right? So which are the services when you talk about the consumer price index? Tuition fee, communication, transportation, entertainment, clothing, food and beverages, housing and medical expenses. Question number 3. Again, a very easy question, is a typical one marker for phase 1. Typical one marker. Who releases the wholesale price index figures? A. Ministry of Statistics and Program Implementation. B. Ministry of Home Affairs. C. Ministry of Finance. And D. Ministry of Commerce and Industry. Who releases the wholesale price index figures? A. Ministry of Statistics and Program Implementation. B. Ministry of Home Affairs. C. Ministry of Finance. And D. Ministry of Commerce and Industry. What do you think is the correct answer? I am expecting all of you to give the correct answer. I would definitely want the regulars who have joined this session previously also to give the correct answer to a question like this. Who releases the wholesale price index figures? A. Ministry of Statistics and Program Implementation. B. Ministry of Home Affairs. C. Ministry of Finance. And D. Ministry of Commerce and Industry. What do you think is the correct answer? Revealing the correct answer to you, the answer is D. The wholesale price index is published by the Office of Economic Advisor under the Ministry of Commerce and Industry. Very important. हो सकता है कि they might not even give you Ministry of Commerce and Industry as an option. They might directly give you the Office of Economic Advisor as a option. So in that case, you will have to tick that. Right. So the figures related to wholesale price index are published by the Office of Economic Advisor under the Ministry of Commerce and Industry. Question number 4. Which of the following statements regarding infrastructure investment trust is correct? Okay. Now read the question statement very carefully. I hope you have read about the infrastructure investment trust in the past. Which of the following statement regarding infrastructure investment trust is correct? An INVIT consists of 3 elements: trustee, sponsors or sponsor, or an investment manager. B. The minimum investment amount in an INVIT initial public offering is 20 lakh. C. INVITs are regulated by the Securities and Exchange Board of India, Regulations 2014. And D. None of the above. See, the question is about INVITs. So you have to give the correct answer. Which of the following statements regarding the infrastructure investment trust is correct? An INVIT consists of 3 elements. First, trustee. Second, sponsors. Third, investment manager. B. The minimum investment amount in an INVIT initial public offering is 20 lakh. C. INVITs are regulated by the Securities and Exchange Board of India, Regulations 2014. And D. None of the above. What do you think is the correct answer, boys and girls? So let me reveal the correct answer to you. Answer is C. The INVITs are regulated by SEBI under the Infrastructure Investment Trust Regulations 2014. Now, what is important in these kind of questions, which could be asked as 2 markers, is their explanation. So I hope you are going to take the explanation in your copy. So like mutual funds, they have a trustee, sponsor, investment manager, and also a project manager. So see, here the fourth element, the project manager, is not given. So therefore statement 1 is incorrect. It should have a trustee, sponsor, investment manager, and a project manager. Okay. Apart from that, trustee has the, see, you need to understand the details of it also. So the trustee has the responsibility of inspecting the performance of an INVIT. Sponsors are promoters of the company that set up the INVIT, right? Then third, investment manager is entrusted with the task of supervising the assets and the investments of the INVIT. Fourth, project manager is responsible for the execution of the project. Okay? Project manager is responsible for the execution of the project. Now, the minimum investment in an INVIT is rupees 10 lakh. Therefore, INVITs are suitable for high net worth individuals, HNI. So here the initial public offering is 10 lakh, and what is it given in the option? It is given as 20 lakh. So obviously that's incorrect. Okay, the minimum investment amount in an INVIT initial public offering is rupees 10 lakh. Therefore, INVITs are suitable for high net worth individuals, institutional and non-institutional investors. Okay. Question number 5. Just on the lines of INVIT, there is always also a question on real estate investment trust. So, which of the following statements regarding real estate investment trust is correct? A. REIT is a process to generate funds from a lot of investors to directly invest in properties like offices, residential units, hotels, shopping centers, warehouses, etc. B. The trust distributes 50% of the income amongst its investors via dividends. C. Both A and B. D. Neither A nor B. So here again, you need to see this as a 2 marker. This could be the question is deliberately designed from from the objective of making it a little tough, because I want you to get into the habit of solving tough questions also. Just because I say it's tough doesn't mean that it's going to be something that you cannot answer. You obviously can answer because you have been reading and revising. So I can see some answers filtering in here. I want more people to answer. So which of the following statements regarding the real estate investment trust is correct? A. REIT is a process to generate funds from a lot of investors to directly invest in properties like offices, residential units, hotels, shopping centers, warehouses, etc. B. The trust distributes 50% of the income among its investors via dividends. C. Both A and B, and D. Neither A nor B. So what do you think is the correct answer? Let's take a look at the correct answer now. The correct answer is A. REIT is a process to generate funds from a lot of investors to directly invest in properties like offices, residential units, hotels, shopping centers, and warehouses, etc. So let's take a look at the explanation, because as I always say, explanation is more important than the question itself. So for the people who have not been in the knowledge of REITs, they take a very close look. In fact, REITs are similar to mutual funds, but they are not mutual funds. They are only similar to mutual funds. So while mutual funds provide for an opportunity to invest in equity stocks, REITs also allow one to invest in income generating real estate assets. Right? You buy stocks on the stock market, right? Like a Nestle stock or a SBI stock, right? If you have money to invest, you can also invest in income generating real estate assets, right? There are real estate assets also under this trust. You can invest in that, and once the real estate project takes off, once there is a boom and once there is a sale, then you would be getting a profit out of it, right? Because real estate is a profit making business. Therefore A is correct. The trust distributes 90% of the income amongst its members via dividends. Hence B is incorrect. What was given? 50%. No. Right. Suppose you have invested 10 crore rupees and you made a profit of the entire the trust, not you, but the trust. If there were the total size of the real estate investment trust in a particular project was 10 crores, and when it was sold at 12 crores. So how much profit is there? 2 crores. Now out of these 2 crores, 1.8 crore will be distributed amongst the investors of REIT. Okay. So this is how income distribution is done under REITs. Question number 6. This is interesting. Basel norms are related to insurance sector, telecommunications, real estate, and banking sector. A very typical easy 1 marker for phase 1. ये तो phase 2 में पूछेंगे भी नहीं ऐसा question, but phase 1 में जरूर पूछ सकते हैं. Right. Question 6. Basel norms are related to A. Insurance sector, B. Telecommunication, C. Real estate, D. Banking sector. Again, I will repeat. Basel norms are related to A. Insurance sector, B. Telecommunication, C. Real estate, D. Banking sector. What do you think is the correct answer? Boys and girls, come on. I want more answers. I want everybody to give the correct answer. I can see some people are not giving the answers. Please give the answer. Basal norms are related to insurance sector, telecommunication, real estate, banking sector. Even if you read the headlines within the notes, you would know that the answer is D. Basal norms or Basal Accords are the international banking regulation issued by BCBS, Banking Committee on Banking Supervision, Basel Committee on Banking Supervision. So the Basel norms is an effort to coordinate banking regulations across the globe with the goal of strengthening the international banking system. Correct? Question number 7. Which of the following statement regarding Basel norms is correct? Now, this is what you can say a little bit on the tougher side. This could be asked as a 2 marker in phase 2 on the same subject, that is Basel norms. So, statement A, Basel norms or Basel Accords are the international banking regulations issued by the Basel Committee on Banking Supervision. Right. B. Basel is a city in Belgium, hence the name. C. In Basel 1, the minimum capital requirement was fixed at 10% of the risk weighted assets. D. None of the above. So, which of them is correct? If you've gone through the explanation properly of the previous question, you would realize that the answer to this is simply A. The Basel norms or Basel Accords are the international banking regulations issued by the Basel Committee on Banking Supervision. Now, time for the notes making through the explanation. So the Basel norms or Basel Accords are basically issued by BCBS, and why is it there? Why have they been issued? But because globally we want to ensure financial health of the banks, and we want to ensure better regulatory mechanisms to be put into place. Right. Basel, by the way, you should note, is a city in Switzerland and not in Belgium. So statement number 2 is obviously incorrect. It is also the headquarters of the Bureau of International Settlement. Right. So Basel 1 focus entirely on credit risk. What is credit risk? When you give out a loan, there is always a risk associated with that as a bank, correct? There is a risk that that loan will become a non-performing asset in the future, correct? So there is a credit risk. So Basel 1 focused on minimizing the credit risk of the banks, or minimizing the impact of a credit loss or a credit risk. So under that, the minimum capital requirement was fixed at 8% of risk weighted assets. How much? 8% of risk weighted assets. Right. So whatever assets that are there, you will get an average of that, giving assigning them certain risks weights, and of that 8% capital will have to be kept with the bank, set aside. So that is 8% of the risk weighted assets and not 10%. So therefore C is incorrect. Question number 8. Which of the following statements is correct? A. Basel 2 guidelines were based on 3 parameters, which the committee calls it as pillars. B. Basel 2 was released in 2010. C. Basel 2 guidelines were introduced in response to the financial crisis of 2008. And D. None of the above. Then again, see, this is a question on Basel 2. And also, as per expectation, this is a little bit on the tougher side. Therefore, again, this could be asked as a 2 marker. Such questions could be also always asked as 2 markers. So which of the following statements is correct? Basel 2 guidelines were based on 3 parameters, which the committee calls it as pillars. B. Basel 2 was released in 2010. C. Basel 2 guidelines were introduced in response to the financial crisis of 2008. D. None of the above. So I want more answers. I want more people to ideally join this session, and I want more people to give the correct answer. So I'll be revealing the correct answer to you in the course of next 5 seconds. 5, 4, 3, 2, 1. The correct answer is A. Basel 2 guidelines were based on 3 parameters, which the committee calls it as pillars. Right. What are these pillars? Capital adequacy requirement, supervisory review, and market discipline. Right. So definition wise देख लेते हैं. According to capital adequacy requirements, जैसे कि हमने Basel 1 में भी देखा था, bank should maintain a minimum capital adequacy requirement of 8% of risk weighted assets. Correct. Second, supervisory review. According to this, banks were needed to develop and use better risk management techniques in monitoring and managing all 3 types of risks that a bank faces. That is a credit risk, market risk, and ऑपरेशनल रिस्क. इन तीनों रिस्क को ध्यान में रखते हुए, इन तीनों रिस्क के हवाले से बेसल 2 ये कहता है कि एक सुपरवाइजरी रिव्यू होना चाहिए इन अ टाइमली मैनर टू चेक द मैनेजमेंट टेक्निक्स. or to embed more better management techniques in monitoring and managing. Monitoring and managing what? All three types of risk that a bank faces: credit risk, market risk, and operational risk. The third pillar is market discipline. This needs increased disclosure requirements, right? The banks need to mandatorily disclose their CAR, risk exposure, and other stuff to the central bank. In India's case, that would be RBI. Okay, CAR is again nothing but capital adequacy requirement. ओके, सो ये पूरा डिस्क्लोजर होना चाहिए और वो भी कंप्लीट फेयर मैनर में और टाइमली मैनर में ये डिस्क्लोजर होना चाहिए बैंक की तरफ से. देयरफॉर ए इज करेक्ट. In 2004, Basel II guidelines were published by the BCBS. So not in 2010, therefore B is incorrect. And Basel III guidelines were introduced in response to the financial crisis of 2008. Right? So यहाँ पे आप देखोगे कि even C becomes incorrect. ठीक है? So I hope I have given you adequate information regarding Basel 1, 2 and 3. Moving on, question number 9. The annual financial statement is presented under which article? Article 111, Article 112, Article 113 and Article 114. The annual financial statement is presented under which article of the Constitution? This could be asked as a one marker in phase 2. Okay. So the annual financial statement is presented under Article 112. Okay. So under Article 112 of the Constitution, a statement of estimated receipts and expenditure of the Government of India has to be laid before Parliament in the respect of every financial year, which runs from 1st April to 31st of March. This statement titled Annual Financial Statement is the main budget document. मतलब आपका यूनियन बजट जो है वो कौन से आर्टिकल के तहत प्रेजेंट किया जाता है? 112. यूनियन बजट देखिए, ध्यान में रखिए, यूनियन बजट ये टर्म कॉन्स्टिट्यूशन में मेंशन नहीं है. कॉन्स्टिट्यूशन में उसकी जगह क्या मेंशन्ड है? एनुअल फाइनेंशियल स्टेटमेंट. इन द कॉन्स्टिट्यूशन अ बजट इज नोन एज द एनुअल financial statement. Okay, so that is correct. Question number 10. Which of the following statement is correct regarding marginal standing facility? Okay, I hope you have heard about marginal standing facility. So which of the following statement is correct regarding marginal standing facility? A, MSF is the rate at which banks are able to borrow overnight funds from RBI against the approved government securities. MSF can be used by banks anytime. RBI allows commercial banks to borrow against government securities at a lower rate than the prevailing repo rate. मतलब अगर repo rate 5% है तो you can avail the loan facility at 4%, 1% lower. Okay, so which of the following statements is correct regarding the marginal standing facility? Right, this could be used as or asked as a 2 marker. The marginal standing facility is the rate at which banks are able to borrow overnight funds from RBI against the approved government securities. B, MSF can be used by banks at any time. C, RBI allows commercial banks to borrow against government securities at a lower rate than the prevailing repo rate. And D, none of the above. So which of the following statements is correct regarding marginal standing facility? Answer is A. Okay, so let's take a look at the explanation. जी देखिए, मार्जिनल, देखिए आप रेपो रेट के तहत तो बैंक से पैसा ले ही रहे हो आपके डे टू डे ऑपरेशंस के लिए, या बैंक रेट पे आप लॉन्ग टर्म लोन्स भी ले रहे हो आरबीआई से एज अ बैंक. करेक्ट. सो मार्जिनल स्टैंडिंग फैसिलिटी की जरूरत कहाँ आ जाती है? It is like a window for banks to borrow from the RBI in an emergency situation when interbank liquidity dries up completely. जैसे आईसीआईसीआई एसबीआई से पैसा लेता है या एसबीआई एक्सिस बैंक से लेता है, कैसे लेता है? एक दूसरे को गवर्नमेंट सिक्योरिटीज देके. But sometimes what happens that the bank liquidity dries up, so you have to go to the RBI. Correct. So the marginal standing facility can be only utilized in an emergency situation. Right. It was introduced in 2011, 2012. Hence, option number A is obviously correct. The difference between MSF and repo rate is that MSF is used only in emergencies. इस चीज को आपको ध्यान में रखना है. Very, very important. MSF is only used in case of emergencies. Hence, B is also incorrect. Why? Now, why does the RBI does this? The RBI does this to control interest rate volatility by allowing commercial banks to borrow against government securities at a higher rate than the prevailing repo rate. हायर 1% हायर रहेगा, मतलब रेपो रेट 4% है तो आप 5% पे लोन ले पाएंगे आरबीआई से जब आप एमएसएफ के थ्रू, व्हेन यू आर यूजिंग द एमएसएफ विंडो टू गेट मनी. Okay, hence C is also incorrect. Okay. Again, I will repeat, it is not 1% lower but 1% higher than the repo rate. This is the relationship between repo rate and MSF, which can only be activated in emergency scenarios. Question number 11, which of the following statements is correct regarding the repo rate? ये एप्लीकेशन बेस्ड क्वेश्चन है, इसको 2 मार्कर या 1 मार्कर की तरह ट्रीट कीजिए. A, it is a rate at which the central bank of a country, which is RBI in case of India, lends money to the commercial banks in the event of any shortfall of funds. B, it is used by monetary authorities to control inflation. C, the MPC, that is the Monetary Policy Committee, determines the policy interest rate, repo rate, which is required to achieve the inflation target of 4%. D, all of the above. देखिए, थोड़ा भी आप एडिटोरियल पढ़ते हो तो आपके लिए ये सवाल आसान हो जाएगा. Which of the following statements is correct regarding repo rate? And the answer to that is D, all of the above. So repo rate is the rate at which the central bank of a country, which is RBI in case of India, lends money to commercial banks in the event of a shortfall of funds, right? It is also used to control inflation. Basically, it is used to maintain it at 4% and with an allowance of plus minus 2%, right? Now, basically, if the repo rate is higher, then the interest rate will also be higher, which is charged by the banks. If the repo rate is lower, then the interest rates will also be lower, right? So this ultimately reduces. If repo rate is lowered, then it reduces the higher. If the repo rate is increased, then it reduces the money supply in the economy, right? Because the interest rates will increase, and therefore there will be less takers of loan, and that will help in arresting the price rise, right? Because not much liquidity is available in the market, therefore not much demand, and therefore inflation can be reined in. The Monetary Policy Committee is statutory, means what? It is effectuated by an act of the Parliament, and it is an institutionalized framework under the Reserve Bank of India Act 1934. For what? For maintaining price stability. They're basically keeping inflation in the range of 4% plus minus 2%, right? So therefore, all of the questions answers are correct. All of the statements are correct. Hence, answer is D. Question number 12. Which of the following statement is correct about cash management bills? A, they are short-term money market instruments. B, they are issued by central government. They are issued only by the central government. C, they are meant to meet temporary cash flow mismatch of central government. D, all of the above. Which of the following statements is correct about cash management bills? A, they are short-term money market instruments. B, they are issued by the central government of India. C, they are meant to meet temporary cash flow mismatch of central government. D, all of the above. Cash management bills. Okay, I want more answers here because they can ask you questions on instruments of investments a lot. So let's take a look at the answer. The answer is D, all of the above. So that means this note is very important. So the government of India, in consultation with RBI, finalized and introduced a new short-term instrument called as cash management bill. तो कैश मैनेजमेंट बिल एक शॉर्ट टर्म इंस्ट्रूमेंट है, ठीक है. Why is it introduced? To meet the temporary cash flow mismatches of the government, not of the banks but of the government, right? The government can also have cash flow mismatch. The cash management bills are non-standard discounted instruments issued for maturity of less than 91 days. 91 days से भी less maturity होती है, ठीक है. So they can be issued as and when the need arises, as and when there is a need for cash flow, correct? So the cash management bills are non-standard discounted instruments issued by the for maturities less than 91 days, correct? Question number 13. Which of the following statement is correct regarding treasury bills? A, treasury bills can only be bought by insurance firms. B, they are presently issued in three tenors, namely 91 days, 182 days and 364 days. C, the state governments can issue any treasury bills. D, none of the above. Again, this question is a little bit on the tougher side, so I would classify it as a 2 marker. Which of the following statement is correct regarding treasury bills? A, treasury bills can only be bought by insurance firms. B, they are presently issued in three tenors, namely 91 days, 182 days and 364 days. C, the state governments can issue any treasury bills. And D, none of the above. So what do you think is the correct answer? Let's take a look at the correct answer. The answer is B. They are presently issued in three tenors, namely 91 days, 182 days and 364 days. So cash management bills और treasury bills में पक्का एक तो चीज होगी कि फर्क ये है कि cash management bills are issued for a tenor less than 91 days. But treasury bills के tenors देख लो 91 days, 182 days and 364 days. Okay. So let's take a look at the explanation. individuals, firms, trusts, institutions, and banks can purchase treasury bills. Hence, A is incorrect. Okay, which who can purchase? Individuals, firms, trusts, institutions, and banks. All of them. So again, it is a widely used instrument of investment. Treasury bills or T bills, which are money market instruments, ये money market instrument है, are again short term debt instruments. Just like cash management bill, this is also short term debt instrument which is introduced by government of India in three tenors: 91 days, 182 days, and 364 days. Right? The state governments do not issue any treasury bills. Very important. The state governments don't issue any treasury bills. And interest on the treasury bills is determined by market forces. Here the market forces will determine that. अगर आप देखोगे कैश मैनेजमेंट बिल्स तो देवर डिस्काउंटेड, मतलब उनकी मैच्योरिटी के बाद वो आपको एक फिक्स रिटर्न रेट ऑफ इंटरेस्ट देंगे. मतलब कैश मैनेजमेंट बिल का अगर फेस फेस वैल्यू 10 रुपया है तो आपको 9 रुपए में दे देंगे. ठीक है, डिस्काउंट मिल गया आपको. और जब मेच्योर हो जाएगा तो आपको 10 रुपए वापस कर दिए जाएंगे. राइट, तो आपको 10% रिटर्न मिल रहा है, यहाँ पे फिक्स रिटर्न है. ये कैश मैनेजमेंट बिल्स में पॉसिबल इसलिए होता है बिकॉज दे आर इशूड एट अ डिस्काउंटेड प्राइस. जैसे आपको 10 रुपए का कैश मैनेजमेंट बिल 9 रुपए में मिल गया था. राइट, मगर यहाँ पे ऐसी बात नहीं है. यहाँ पे मार्केट फोर्सेस विल डिटरमाइन. ओके, वेरी वेरी इंपॉर्टेंट. Question number 14. Which of the following statements related to the certificate of deposit is correct? A. It is issued by all scheduled commercial banks including regional rural banks and local area banks. B. Minimum amount for certificate of deposit has been fixed at rupees 10 lakhs. C. The lock-in period is of 1 year. And D. None of the above. Again, a little bit on the tougher side. So again, I will classify this as a 2 marker. Which of the following statements related to the certificate of deposit is correct? A. It is issued by all scheduled commercial banks, including regional rural banks and local area banks. B. Minimum amount of certificate of deposit has been fixed at rupees 10 lakhs. C. The lock-in period is of 1 year. D. None of the above. Answer is D. A certificate of deposit in India can be issued by all scheduled commercial banks excluding regional rural banks and local area banks. So statement 1 galat ho gaya, right? It can be issued by all India financial institutions permitted by RBI. Okay, hence A is incorrect. यहाँ पे regional rural banks and local area banks don't issue that. And the minimum amount for certificate of deposit has been fixed at rupees 1 lakh to be accepted from a single subscriber and not rupees 10 lakhs. Hence B is incorrect. And there is no lock-in period for the certificates of deposit. यहाँ पे certificates of deposits का कोई lock-in period नहीं होता. तो जैसे कैश मैनेजमेंट बिल्स है वो गवर्नमेंट इशू करता है, ट्रेजरी बिल्स गवर्नमेंट इशू करता है, वैसे सर्टिफिकेट ऑफ इंडिया कैन बी इशूड बाय शेड्यूल्ड कमर्शियल बैंक्स एक्सेप्ट रीजनल रूरल बैंक्स एंड लोकल एरिया बैंक्स, and also they can be issued by select all India financial institutions which are permitted by RBI. And there is no lock-in period. Of course, the minimum amount for certificate of deposit has been fixed at rupees 1 lakh from a single subscriber. ठीक है. Now last question of the day today. Which of the following related to certificate of deposit is incorrect? Okay, incorrect कौन सा है? Banks need to maintain cash reserve ratio and statutory liquidity ratio on the issue price of certificate of deposits. B. Larger amounts have to be in the multiples of rupees 1 lakh. C. They can buy back their own certificate of deposits before maturity. D. All of the above. Again, a little bit on the tougher side, so 2 marker. Answer is C. C is incorrect. Okay. So banks need to maintain CRR and SLR on the issue price of CDs. Right. So it is factually correct. ठीक है. Then minimum amount of certificate of deposit has been fixed at 1 lakh and it is to be accepted from a single subscriber. This we saw in the previous question also. And larger amounts have to be in the multiples of rupees 1 lakh. Okay. And investors cannot buy back their own CDs before maturity. Hence statement C is incorrect. Okay. So with this we come to the end of our session for today. I am sure that you are inching closer towards your exam. एंड देयरफॉर आरबीआई ग्रेड बी लर्न पैक से अच्छा है कि आप आरबीआई ग्रेड बी कंप्लीट पैकेज ले लो, which will also going to help you in your phase 2 preparation. Okay, so till the time we meet next, this is Rohan Dange bidding you goodbye. Thank you, take care, keep revising, keep reading, and stay safe and healthy.